This John Lothian News video is sponsored by ICE's CEO looks at the trading landscape today with a key eye on regulation and clearing. The exchange plans to launch a new exchange and clearinghouse in Singapore this year, giving customers more choice on where they want to trade. ICE's Jeff Sprecher spoke with John Lothian News at the FIA Boca conference about ICE's plans for 2015, the impact of regulation, and what's next in technology.
As a public company, my company had a very good year. We had record revenues and earnings, but it was a very difficult year, a very complicated year for a lot of our customers. Regulation is kicking in. People are having to make decisions about where they hedge and do business, and so we were a bit like a duck whose feet were paddling rapidly as we were trying to work with customers, follow them around the world, and make sure that we had the right solutions for them. So we're quite proud when we look back and see the net result, but boy, it was a chaotic year for us, and moving into 2015, it looks like the pace of regulatory change and influence on our industry continues. We're launching our Singapore exchange and clearinghouse. We acquired those businesses. We basically shut them down, put our own technology in, our own management team in, and then are relaunching them with a new suite of products. It's a big lift for the industry. You're talking about connectivity to a new clearinghouse, funding a new clearinghouse, getting new rule books and rule sets involved. But a lot of our customers are concerned that business that they had in Asia may not come to the U.S. or to Europe where it did before, and we may have to, as a Western industry, reach out to Asia, and so we've decided to do that in Singapore. So that's big on our agenda. Also, last year we acquired a company called Super Derivatives, which is a data and data analytics company. We're integrating that into ICE and getting ready to roll out some interesting new products that we hope our customers will like to help them better analyze the risks in their business and use our products. We've been working with regulators that are implementing on both sides of the pond this new legislation to try to make the underlying regulation as compatible as possible. For the longest time, our industry enjoyed the ability to do business around the world 24 hours a day, and through technology and working out the currency and clearing and collateral issues. But now we have regulation that is somewhat balkanizing our business, and our customers are going to be impacted by that. And what you've seen is my company and some of our peers trying to work, because we understand the legislation quite well, trying to work out the differences so that our customers will be immune from the differences and be able to do business globally as they have enjoyed for many years. My company started by building an electronic trading platform, and we've never stopped investing in it. Our customers want reliability, certainty, and scalability. And we're bringing that kind of mindset to the New York Stock Exchange, where we're basically putting in an all-new platform for them that'll be faster, safer, and easier to manage and maintain from both the operation and compliance standpoint. So that's an interesting technology project for us. We also continue to invest in clearing. The model for clearing continues to evolve, and the data that is needed and the risk tools that are needed to look at what's going into these clearinghouses continues to evolve. And so that tends to be a collaborative effort with all of the people that surround clearing, but ultimately then implemented by us. So those are kind of very interesting, in the weeds, but very interesting projects that we have going on in the company. We last year acquired a clearinghouse in Amsterdam so that we have a clearinghouse on the continental European landscape. We have one in Europe, we have one in Canada, we have two in the US, we have now one in Asia, we're joint venturing in Brazil. So My company is globally positioned. It's very hard for us to know, however, where our customers want to do business. And until all the regulation is rolled out, until the capital rules are really adopted, it's going to be hard to know where we're going to meet customers. And so we feel good in that we have a lot of options for customers, but we don't know which options customers are going to take. So, we sort of look at 2015 as if it's a transition year for the industry, and we'll let it play out. We're going to go into a more constrained capital environment. I mean, it's already happening through bank rules, and as customers are mandated to use clearing, they're going to be having to post more collateral in a way that they haven't been used to before. So another constraint. We have a lot of clearinghouses. It's probably most efficient to organize in one and make that the most capital efficient, but the market wants diversity for risk management purposes, and it wants geographical diversity for business purposes. And so I don't think we know how that chessboard plays out yet. It's why my company's keeping a lot of options open, a lot of conversation with regulators and customers about where business is going to flow. It's somewhat difficult to coordinate all that, but honestly, because we are a technology-based company, we can make that interface somewhat seamless for our customers.